Are you sick and tired of crappy 1.5% renewal rates on your annuity when you know that rates are as high as 5 to 6% on MIGAs and caps are between 12 to 13% on indexed annuities when you buy a new one? What gives? Well, guess what? That's what we're discussing in today's video. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And if you have an annuity that's up for renewal, you're going to want to make sure to watch this video to the end because we're sharing how not to get screwed.
That's so true, Michelle. You get your annual annuity statement in the mail and you open it up to see 1 to 1.5% caps for your renewal or interest rates of 1% fixed for the next year. Really? And you hear from your friend or neighbor that you just got an annuity with rates above 6%. Don't that kind of remind you of the AT&T commercial for new customers getting
Yep.
better deals? That's the first thing I think of every time I see these.
Exactly right. It'll make your blood boil. You're like, wait a minute, how is that?
Yeah, it's like, but think about this. Annuity rates have skyrocketed this year due to the Federal Reserve's most aggressive interest rate hikes that we've seen in decades. So,
Right. So what do customers, I mean, what does, like, if I hold an annuity, what can I do?
okay. First, if you're still in touch with your broker or agent, some are, some aren't, call them and ask them to review your policy for you. Some advisors do annual reviews, some don't. And we make sure we cover each annuity when it comes up for renewal with our clients and show them what the caps and rates are and where they are going to be for the next 12 months. That's one thing. Also, you're already checking online. You're already hearing about all these rates, right? Going up, and you keep getting notification. Oh man, annuity rates, MIGA is at 5.5%, 6%. You watch our channel and you hear us talking about it for the last 6 months as rates steadily climbed. So check out the rates online so you know what you're comparing to. And we're last of not least, if you can't get a hold of your advisor, contact the current company who holds your annuity and see if they have what's called an internal conversion that may be available for you. And that allows you to transfer from your one policy to a new policy. Some carriers do, some don't.
Okay. So I have two questions because first of all, I'm going to ask both of them and then let you answer. I
Sure.
would like to know how annuity rates and caps and participation rates are calculated because I
Okay.
think that's important. If you can call them, you have to know how they're calculating this, right?
Sure.
But the second thing is maybe this is the question you answer first is if if it's up for renewal, you can always just let it expire, get your money and go find a new one, right? If you A can't get a hold of your agent or B you're not getting the rates that you want.
Yes. Let's start with that one first
Okay.
because you brought up a good point there. Okay, so your policy renews. Okay, it matures.
Right.
You can either leave it with the insurance company and they will send you a notification like a month ahead of time saying, hey, here's what your new rates are going to be. Okay.
Okay.
They're not going to be today's current offered rates.
Okay.
They're going to be based on when you wrote that policy back in
Sure.
the day. Okay. So it may be a little bit higher, but it's not going to be what you expect to see in a new policy. But
Okay.
what you don't want to do is take the money and run. And
Right.
there's two reasons why. One, if you got a qualified annuity like an IRA, what you want to do is a direct transfer from one IRA to the
For
other
the other.
so it doesn't create a taxable event.
Okay.
Same thing with non-qualified annuities. If you were going to go from one annuity to another, you want to use a non-qualified, a 1035 exchange. So all them are tax deferred earnings that you build up in that first policy.
Right.
If the minute you cash that out and then take your cash and run and open up a new annuity, you just create a taxable event on all them gains in that first annuity.
Right.
But if you use that 1035 exchange, you can go from one annuity right to the other and let that deferment of them interest continue to accumulate. So,
Okay. All right.
second, let's go back to what you asked about how the annuity rates, caps, and participation rates are all calculated. Okay. Let's start with traditional fixed rates. Okay. Fixed rates move on how the market's moving today. And a lot of
Sure.
them track what's called the 10-year treasury note. Well,
Mm-hmm.
we've seen that dramatically move up here in the last 12 months since the Fed started raising
Rate
interest
hikes. Yeah.
rates. Okay. So it'll track that pretty consistently. Caps and
Participation.
participation rates are a little bit different. Okay. The caps are based on the indexes and the volatility of, let's take the S&P 500. So when you buy an annuity that's an indexed annuity that has a S&P 500 caps, and let's say today's caps are between 12 and 13%. These are some of the highest caps, Michelle, that I've seen in a decade and a half, 10 15 years, easily. And some of them I haven't even seen that high since I started in the business 25 years ago.
Okay.
So what this is based on the volatility. You see the market going up and down
Yeah.
on a daily basis. Yesterday was down. I mean, last week was up 700 points in one day. We're
Yeah.
down 500 yesterday,
A little
down by
volatile.
300 today again. That's the volatility of the market. Well, as the volatility increases, the price of options expand higher also.
Got it.
There's where we're getting our caps and participation rates at
Okay.
today because of the volatility of the market. Like I said, these are some of the highest that we've seen in well over a decade, and but that's how they work.
Great. Awesome. Okay, so here's what we're going to do. We're going to put a link below this video to how the Fed rates, the rises in federal interest rates affect you. Because
Yes,
one thing that we talk about over and over on this channel is how important it is to really understand like what's going on with your money, and don't just take some talking heads word for it. Don't
right.
even take our word, right? Go do your research. I mean, this is
Do
part of
your
the
own research.
research. Yeah. And understand how the Fed rate hikes really impact. Like, look at this, right? Perfect
Right.
example. And if you don't know that you have the ability or the you can go out and get better rates, don't just take that 1.5% renewal rate. Don't do
Right.
it.
Don't do it. Same with
Right?
CDs. It's the same thing there. I mean, with
Mhm.
CDs, the same thing. You're
Yeah,
going to take the crappy renewal rates you're getting from CDs today, or do you want to see what's better for you out there? So
absolutely.
it's
Absolutely.
all about getting what the most that you can for the least amount.
Yes. All right. If you like the content of this video, hit the like button, help us grow this channel, tell more people about us. If you have questions, leave them in comments below, and don't forget to subscribe. And do check out that video. We'll put it in the pinned comment and the description below. Anything else, Brian, you want to add?
DYOR, do your own research on this, but
Always.
definitely take advantage of when the opportunities are handed to you, literally handed to you, like they have been in the last 10 months. Make sure you do what's best for you and your family to get the best that you can out of your retirement and savings.
Amen. All right. Thanks, Brian, and thanks to everyone who watched.
Thanks, everyone. Have a great day.